Guys, good morning. Slow Mondays as usual. That's why we call them Lone Wolf Mondays. Today is going to be we got only about 5 people in the room today. Um, Today there's no teaching or training subject for today. This was the week. This was technically the last week of our 12-week transformation for most of you guys. 12 weeks goes fast, but this week was going to be money management. Jason's on vacation, and Jason. That's usually the part he does since he's much better. That would be my weak point, is going through that money management spreadsheet and showing you guys how to use it and explaining the difference. So what I decided to do is take a week off. We'll do a normal laid-back Q&A session. And then next week, we'll come back and do the money management part of it. So today is kind of just open question. And Sean started off. He said, Akil, how do you personally keep the motivation up when you are in yet another drawdown? What do you do to really push yourself as a trader in your darkest moments? That's a good question. Now it helps that I have 100% trust in my plan, meaning that I've made enough mistakes and I've skipped enough trades and quit enough times that I've learned not to do it. In the past, I would get into drawdowns. I would stop trading because I'd be like, well, I just lost the last 4 trades. Well, this 5th trade is going to be a loser too. And then I've been bitten in the butt by that, meaning that 5th trade is the one that makes up, makes the profit back. And I've had to sit there and kind of accept it. I've done that with, I've done that plenty of times. So I kind of learned my lesson the hard way, that it ends up being worse if I try to pick and choose what valid trades I enter, if I just skip ones because I'm scared. It took a while to do that, but that's, over time, that's allowed me to develop, again, 100% confidence in continuing to trade that plan, and that even when it looks the darkest, if I take those trades, good things will happen because I've done the work necessary to. You just got to realize, though, mentally, you just got to say that drawdowns don't last forever. Drawdowns don't last forever. Eventually, they do end, and the only way to get out of them is to keep trading. I wish I had a shortcut for you, but it's really confidence, and a lot of that confidence comes from doing your back testing. If you've done your back testing and you have your stats and you can go back and look at them and say, well, during my back testing, there was a streak where I lost 10 times in a row. So I know that this is possible. I know that I can potentially lose 10 trades in a row and it's still okay. And knowing that, I like to know that maximum, basically your maximum losing streak and your maximum winning streak, and gives you takes kind of the fear away. So again, if you know your maximum losing streak during your whatever 5 years of back testing was 10 trades in a row, by the time you're at 8 trades, just feeling bad, you're like, all right, man, this is horrible. Things should be turning around soon, but I know that potentially, these next 2 could be losers as well. That we've seen that in the past, so it could happen again. But at least it kind of gives you a mental, some type of stability, knowing that this could happen. But it's tough. It's not easy. It's not easy at all, Sean, and that's why a lot of traders fail, because they get to that point where it gets frustrating and they just quit. They just quit. And I'm sure you guys have done it before. You guys have gotten to the point where you've had a trade and you said, you know what, I'm just going to pass on this one, right? And then you come back and that's the winner, and you're like, oh man, I knew I should have took it, and And as I mentioned this morning, I was in a drawdown the week before last week. I was about 100 and something pip drawdown the week before last week. Going into Friday of this past week, I was down about 100 pips, and I'm like, man, I don't like trading Fridays anyway. I'm like, you know what, I should just, take off. But stuck to the plan, entered some trades, and ended up banking about 60 pips on Friday, which, helped a lot. Helped a lot. Was still down for the week, but being down 40 pips felt a lot better than being down 100 pips, and having those, I think I caught 4 winners on Friday. Having those 4 winners, again, helps to rebuild the confidence going into this week. How long do we have? Do we still have access to the live room, private client group, etc.? Well, Darren can answer that better than me. I know private client group is ending, I think, as soon as you guys are done. I think the private client group is soon. I know Jason's not going to resume doing that. We'll probably give you what it's, yeah, I don't know. There you go. Access August 15th. August 15th, you'll have access. There you go. So we'll throw in a few extra weeks. Two more weeks extra for you guys. I'm going to miss you guys. I really like having the training groups. I mean, the live room's fun no matter what. I really like having the training groups come to the live room because it just, I get a lot of questions that are I don't want to call them newbie trader questions. I get a lot of questions which are good because it makes me think. Whenever I think, it's continuing my own educational process. Usually when we have the live room members in there that are, we have a lot of professional traders in that live room. So some of them never ask questions. They're just like, hey, Kale, I have my plan. I'm just here to, bird dog and chit chat a little bit. So I like having the training groups because it gets some pretty good questions. Mark said, I've heard you say that you don't like to hold your intraday trades over the weekend. So does that mean any trades you have come Friday night, would you exit at the market regardless of position? For the intraday trades, yeah. I haven't been doing a lot of swing trading. But the swing trading, you got to keep them on because you got to expect to be in the swing trade for days and maybe even weeks. Hopefully not weeks, but intraday trading, yeah. Intraday trading, yeah. I'll take it off because I don't want to. It's not worth it messing with gaps and I don't want to have to be there Sunday at 5 o'clock in front of my computers right away to make sure the market didn't gap me out or something that didn't gap past my limits. And so intraday trading I'll take out before the weekend. When I did a lot of day trading I would take out unless I was waiting for a target too. Day trading I'd take it at the end of the day. So if 5 o'clock came and I wasn't out the day trading position, I took at 10 o'clock in the morning. I just close it out. Nothing you have to do. It's not mandatory, but I prefer to do that just because I'm really big, especially on structure-based trades, on risk management, managing these trades. So I want to watch and be able to trail, and again, over the weekend I don't have that type of control. I guess I never have control, but going back off past experience, I've seen some wild stuff happen over the weekend, and I'd rather be flat, count my profits or my loss for the week, and just start fresh. Denny says even if it's a pattern, if it's intraday, yeah. If it's lower time frame, yeah. If it's lower time frame, so if I'm trading on a 5-minute chart, 15-minute chart, I won't hold those over the weekends. No, swing trades I will. Swing trades I will. Lower time frame stuff, no. Paul says, can a 1 hour time frame be used for swing trading, and what would be your lower time frame? The 1 hour time frame, yeah, I would say this. In the past, yes. In the past, yes, the 1 hour time frame would be kind of the lower end of swing trading. Maybe not so much right now, just because of the range in the market. You can still catch swing trades off the 1 hour time frame, but the ranges are going to be a lot smaller. Meaning, most of your 1 hour trades are going to be like, they may only be like 20 or 30 pips right now. So you're not going to hold them for too long. But yeah, that would be the lowest I would go. If you're going to use the 1 hour for swing trading, I would say that the 1 hour would be considered your lower time frame for swing trading. I mean, you're doing your analysis off the 240 or a daily, and you're going to the 1 hour for entries. If you're going to use the 1 hour for your analysis and go to a lower time frame for your trading, that's no longer swing trading. That's going to be intraday. Because once you get to 60-minute, that's intraday. 60-minute, 15, those are intraday trades. Trades you're going to be in for a few hours, maybe a day at most on those time frames. So I would use the 1 hour for swing trading, but only if it's your lower time frame, Paul. If you're going to be using the 1 hour for analysis and then going down towards the 15, which would be the next lower time frame, or even the 5 to 15 in 1 hour, similar. 15 or 5 for your lower time frame, that's no longer going to be considered swing trading. That's going to be more of a day trading strategy. Mark said, so hourly, you'd leave a position on? Yeah. Again, it depends on, because things have changed now, it depends on how big the setup is. And I say that because the movement on an hourly used to be a lot different than the movement on than the movement is now. On an hourly, you used to be able to, average targets would probably be about 40 to 50 pips on an hourly. Now we're looking at hourly charts and we're looking at 10, 20 pips. I'm not leaving a trade that has a 10, 20 pip target on over the weekend because the market could easily gap 10, 20 pips on a regular basis. So it's a little different now just because of the lack of ATR, but typically an hour, I would leave those on. Yeah. Things have just changed so much. So example, I mean, here would be one on the hourly right now. This one would definitely stay on because this is a bigger pattern. We were talking about this butterfly here last on Friday. Entries at 44 flat. Our entries at 44 flat. Our target one was at 43.23. So there's 80 pips in there essentially. That's, I would certainly leave that on over the weekend. An 80 pip move, no problem. Now if this was something like this where entry was down here, targets were like 30 pips, and again, we're seeing this in a lot of pairs. I'm not interested in that, in holding that on. How about that Aussie, by the way? It did exactly what we thought on for you guys ever in the live room. Came right up to 43. Made us a little profit in there. Looks like we may have a cipher down here, actually. Maybe not. Now I'm interested to see. $43.11, yeah. Look at that. Potential cipher pattern setting up. Yeah. Or already filled at 42.73. These things are everywhere. These things, even when you're not looking for them, these ciphers are here. Look at that. 13 pip targets. Mark says, is your live ratio room still continuing after the 12 weeks? Oh yeah. Yep, we run the live room all year. All year. Yep. I mean, we take some breaks in the holidays, but all year. Keeps my trading from getting boring. I don't know. I'd be bored all day if I wasn't running that live room. I'd still be day trading. I may not be day trading. Who knows? I don't know what I'd be doing if I wasn't running the live room. I'd probably still day trade. I'd have nothing better to do in the morning. But I'd probably day trade on the range bar charts, and I don't know. I'd probably be doing a combination of that, combination of strategy development. I used to do before I was day trading full time. When I was just I was a full time swing trader. I only started day trading um, on a consistent basis once I got asked to run the live room. I was just testing strategies and back testing all morning. So I'd give myself about 2-3 hours each morning to just back test strategies and work on new trade setups and stuff like that. My experimental phase. What else you guys? What else has been bothering you guys? What else has been difficult? What's been a difficult part of the learning curve for trading for you guys? Again, this is just a shortened open Q&A today. There's no subject, so it's gonna last as long as you guys have questions. And again, mainly because I mentioned this earlier, but for you guys that are new, mainly because money management isn't my strength, and I want you guys getting the best of the best. So I'm gonna let the big dog teach that when he comes back from vacation. Good old money management. Then he says, when do you decide to use a range bar chart uh, versus a minute chart? If I weren't running the live room, I would probably just use only range bar charts for day trading. They give me a, I'll bring a range bar chart over. They give me a much smoother look at price action. They take out a lot of the really long wicks and the nasty looking movement. Um, I would use them. I would just use them as my default, honestly. Now, when I use them in combination with the 5 minute, I would do something like this. I would use them where if I go down to a 5 minute, I would use them just to get a clearer view on what's going on. So if we have a pair that's really choppy or the movement doesn't look too well, we have a lot of nasty looking candlestick wicks, that's when I would go from the 5 minute down to a range bar and for a different perspective. So if you just want a different view of a current pair, different perspective, you want to see it in a little different light, that's when I would go to the range bars, Denny. But really, I mean, it's I guess kind of like a last. If you have in your plan to use them, you can use them right away. But I would use them as a last ditch effort. Typically, when I would use them a lot in the live room, it's after I would go through all the 5 minute charts, and I would say, okay, I don't really see anything here. Let's just take a look at the range bar charts to see if that gives us a different story. And sometimes in all that consolidation on the 5 minute charts, you'll get some patterns or some setups on the range bar. So I would say after you're done the 5 minute charts. Could you talk about your process for back testing? Sure, it's basically the same process that we talked about a few weeks ago is what I go through my back testing. I'll pick what strategy I want to trade or I want to test. So if I'm doing a cipher pattern, I make sure I only want to test one thing at a time. So I don't want to test ciphers, bats, Gartleys, double bottoms, CTS all at the same time. I'll test one thing at a time. I'll pick out what time frame I want to test on, what pair I want to test on, and then I'll do one pair at a time. And I'll just do this. I'll scroll back. Yeah, we'll pick one again. Pick one at a time. So I'll do this. I'll say beforehand, before I prep, I'll say what am I going to test? So I'm going to test cipher pattern. So we can call this strategy cipher pattern. What time frame am I going to test? 15-minute chart. And I want to look at time period, meaning how long do I want to test? And time period, you can set it up a few ways. You can say, hey, I want to get at least, I'm going to back test until I get 100 trades, or you could say I'm going to go back 2 years. I typically do that. I'll go back a certain amount of time to work my way forward. Yeah, you just got to ignore it. And then I'll do a portfolio. And you can do this on the go. But what I'll do is I'll typically think about how many pairs I want to test this on. And you can add them as you go, but I'll say, euro, pound, I'll list, maybe I'll say, hey, I want to test it on eight pairs, and then I'll do the analysis on that. And then I simply just go back. I'll go back in time and I'll get my coffee and put some music on, or put the TV on, and just click one thing at a time and say, you know what, all right, what do we have here? We've got swing low to swing high. All right, come back, B leg is fine. Let's measure a C leg. All right, C leg, I got the 127. Let me just bring my 1414 in here to make sure I know we don't close above that. So I'm going to put a line right here, because the fibs are going to look a little weird when you don't have any white space. I'll say, all right, well, up, still valid, still valid. Okay, I can even draw it out. I can say my cipher pattern completion would be right here. This would be awesome if we actually get one. My cipher pattern completion is going to be right here at 154.48. Let's see if we're going to get down there. Okay, okay. Working, 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 invalid. All right, erase that data, go to the next one. But the key is just ignore everything else. I mean, ask yourself this question: what's the point of finding it? What's the point of it? It's okay to find the bat pattern while you're testing. You can test through and say, okay, man, that's a pretty cool Gartley, but just don't take any stats on it. It's okay to find it, but just be like, hey, that's a cool bat. Oh, look, looks like a winner. But just don't put it in your spreadsheet. Just don't write any stats down. Only look for the ciphers. You want to focus your mind on only that, because during your back testing, the longer you back test, especially if you do marathon sessions like I used to do, if you do marathon sessions, meaning you do like 5 hours a day, you're going to start missing a lot of patterns, because your brain's just going to turn numb. You're going to get to the point where your brain just is like, I've been staring at this screen for 5 hours, and you're going to start missing stuff. So you want to stay focused on that one pattern. Yeah. And hey, break it up into segments. Say, hey, I'm going to do an hour at a time. There's no rush for back testing. There's no rush for back testing. You can do marathon sessions if you want, but there's no rush. Break it up. Say, hey, every 5 patterns I find, I'm going to take a break. Or every hour, I'm going to take a break. I'm going to take a 15-minute break every hour. So if it's 9:30 right now, when 10:30 comes, I'm going to take 15 minutes. I'm going to walk outside, or I'm only going to do a certain amount of trades per day. I used to schedule my back testing. I used to try and complete each thing in my back testing within 2 weeks. And I would schedule it out. I would want to test about 8 pairs or 6 pairs. So I knew I wanted to trade 4. So I'll test out about 8 pairs. I would say that I can do 1 pair in 2 days. It would take me two days to do a single pair, and I would break it up. But there's no rush. No rush in it at all. But definitely you want to do one thing at a time. Don't try to back test everything at once. And I get emails like that sometimes. People will send me back testing results, and there'll be bats and ciphers and Gartleys and all types of things on there, but it's like 2 of each. That means nothing. Your best case is doing this. Have your cipher back testing, Have all your cipher backtesting data over here. Have all your Gartley pattern backtesting data here. Have all your bat pattern backtesting over here, and have all your butterfly data over here. Once you have all of them, then you can start breaking it down. Hey, what pairs work the best? Well, for the cipher pattern, it was euro dollar, pound dollar, dollar CAD, pound Swiss, and Aussie dollar. Those were the top 1, 2, 3. Those were the top 5 pairs for that one. For this one, it was pound dollar, dollar CAD, Aussie dollar, maybe New Zealand dollar, pound Swiss. Those are your top ones for that. And do that for each one. Excuse me. And then just compare. You're like, well, for all 4 patterns, guess what? The euro dollar or the pound dollar performed well. So boom, that's one that's going to be in my portfolio. Pound dollar. What else is here? Look, dollar CAD was on both. That's going to be in my portfolio. And then whatever numbers in your portfolio, pick those pairs out. And then after you're done doing that, then you can add all those backtesting results together and look at your portfolio as a whole. You can say, okay, well now if I combine all the stats from 4 patterns tested, here's what I can look at. Here's what I can look at for expected results for my for my trading portfolio. And with each thing you backtest, some are going to perform better than others. You're going to have some patterns that work great on euro dollar. You're going to have some patterns that get hammered on euro dollar. So you look for ciphers on each list, but break it up into different times that you work on it. Yeah. So I'll look for, if I'm backtesting ciphers. Let me go back. What do you mean by each ciphers on each list, but you break it up? When I'm backtesting ciphers, I will backtest ciphers on, say, 4 different time frames, or 4 different pairs, 6 different pairs. So when I'm back to, I don't know why this is, my mouse is being crazy this morning. Stop that. Delete. There you go. When I'm backtesting ciphers, I'll say I'm backtesting the cipher pattern. I'll do all my backtesting on the euro dollar, and all my backtesting on the pound dollar, all my backtesting on the dollar CAD, pound Swiss, whatever pairs I want to test it on. I'll backtest each and every one of those pairs. And then I'll look at the results from each pairs, and depending on how big I want my portfolio to be, say I want to trade a 4-pair portfolio, I'll say, okay, well, which 4 pairs perform the best? Out of the 8 pairs I backtested, which 4 performed the best? I'll take those 4 and I'll say, you know what, Akil? I can trade cipher patterns on these 4 pairs. Then I will proceed to trade cipher patterns on those 4 pairs. Then if I want to test Gartley's, I'll do the same thing. I'll go to Gartley patterns and I'll pick whatever pairs I want to backtest on Gartley's. I'll spend a month backtesting them, and then I'll say, hey, Akil, these are the results from the Gartley pattern. These are what pairs perform the best. I will only trade Gartley patterns on these 4 pairs. And then move on to bats, move on to butterflies, do the same thing. So I'll have set pairs that I can trade each. You can have set pairs that you trade each pattern on. Now, eventually, to make it less confusing, so if you do become that trader that goes on to trade 4 different patterns, instead of having a checklist that says, well, I can only trade the cipher on this, but I can only trade the pound on this, you look for what pairs they have in common. So if you have good performance results for all 4 patterns on the euro dollar, boom, euro dollar is one of your portfolio. Look for what pairs performed well on every pattern, and you can simplify your portfolio and not have it be as confusing. Who is Skyping me early in the morning? Marius. Yeah, the key is just being keep it as simple as possible. The key is just being as simple as possible. Don't overcomplicate it. Just taking one step at a time. The hard part is just actually doing the back testing. Once you have the data, that's easy. You just got to crunch the numbers. Easier said than done. No, it's easy. It's easy. Again, pick one strategy, pick one pair, pick one time frame, and back test it. Then repeat. One strategy, one pair, one time frame, repeat. It may take a while, but if you do it right the first time, you don't have to do it again. Another mistake I made, back testing the same thing a million times. But again, one pair, one time frame, one strategy. Just got to shut off the rest of the brain that wants to see everything else. That's how a lot of traders get in trouble. They just see so much, and that's that's why I try to take it so slow through the 12-week transformation, because you guys get so many different ways of trading. You see me trading so different ways in the live room that you want to just go out there and do everything, and it's realize, guys, when I started trading, I traded Gartley patterns only. That was the only thing I traded for about a year. Then I moved on to Gartley's and bat patterns. Then a year later, Gartley, bat patterns, and cipher patterns. So it's a slow, continuous process. But start simple. Find one thing that can make you money. Trust me, it'll go a lot easier if you're trading, if you're making money in the markets while you're back testing something else. If you're making profit off of cipher patterns, taking the time to back test the next pattern is just gonna be a lot easier because you see how well the first one's working. Yeah, no need to rush. No need to rush. If there's one thing I wish there's a lot of things I wish I would have done better. One thing I wish I would have done better is myself is not rush. I want to be as profitable as I could, as quick as possible, and I ended up blowing a lot of money. So my advice is take your time and don't donate as much to the market as you will if you rush. Good question. Anything else? Any tips on backtesting CTS? I find it will be easier to backtest patterns as it will be the CTS. Yeah, the CTS patterns are a little easier because the rules are cut and dry. They are what they are for the most part. Targets and stops you can play with, but they are what they are. CTS is a little difficult because you have to essentially you got to think about what do you want to have before you actually trade it. So we have our CTS system, right? Let's just draw it out. We have what? We have RSI, overbought, oversold. We've got RSI divergence. We've got 2 times bottom / top. We've got fibs. We got higher time frame confirmation. We've got ABCD. We've got advanced pattern. Am I leaving anything else out here, guys? 1, 2, 3, 4, 5. We got structure, major and minor structure. Major structure, minor structure. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, yeah, 13. So here's what you want to do. You need to first figure out what is important to you? And you could backtest everything. You could look for any CTS type of trade and keep track of what occurs. That's really the harder way. My advice is to make it a lot simpler and a lot quicker. Is ask yourself, what do you need? What do you want to see? What is kind of in your philosophy? What do you want to see in your CTS system? And here's an example of what I did. When I first started trading CTS, there were a few things that I needed. So I would say to myself this: I need the RSI to be oversold. I don't know if that's going to work. No, it did nothing. I need the RSI to be oversold. I needed RSI divergence. I knew I needed a double top, double bottom. So I wanted to be a conservative trader. And I needed some form of structure. So we can call it, actually, I know when I first started, I didn't need a form of structure. I take that back. I needed this. I needed at least RSI overbought, oversold, RSI divergence, and a double top or double bottom. So I knew I needed a minimum of CTS3 to trade, but my CTS had to have these three things. So when you first start testing your CTS, do the same process, pair, time frame, time period. Go back, you go back and start testing. You look for trades that meet your criteria. So I look for trades where the RSI, I would scroll through, I'd look for trades where the RSI went overbought. Scroll through and say, okay, RSI is overbought up here. I'd look for double tops and double bottoms. And I'd look for RSI divergence. I hope I didn't lose my, there you go. And then what I did was when I went through the trade, I did the same process of keeping track of, winners and losers. But I would have a side note on my Excel spreadsheet where I would list all of these. I would list fibs, higher time frame, ABCD, major structure, minor structure, advanced pattern. And each trade I took, each trade I back tested, I would keep track of how many of these other things were present. You guys follow me on that? While I back tested my CTS system 3, I would keep track of what else were present. So if I had a CTS that met my standards, if I had this, my computer does not like me this morning. What did I do? What did I do to you? So if I had this present at that trade, I would keep a side note and I would say, okay, well, I had fibs there. I didn't have higher time frame there. I didn't really use higher time frame to be honest with you, but it's in there. We didn't have an ABCD. I did have minor structure, major structure. I didn't use advanced pattern either because I only traded Gartley pattern. So and if it was a Gartley, I would trade it aggressively anyway. And over time, when I looked at my results, I would go back through it and I would look for trends. I would say, okay, well, out of say I took 100 trades, I had 40 losers or 50 losers. Out of these 50 losers, what was there something common that was missing? Out of these 50 winners, was there something common that was present? And what I ended up seeing was that in the majority of my winners, guess what was present, guys? Can you guess? Just knowing off the type of trader I am now. No, seriously, really, guess. Write something in. Yeah, structure. Structure. I noticed that a lot of my winners had structure and a lot of my losers didn't have structure. And this is the analysis part. I put 2 and 2 together. I said, well, Akil, if most of your winners had structure, that's something common, and most of your losers didn't have structure, maybe you should make structure a requirement. So I went and made structure a requirement after that. Fibs for me are not a requirement. I like them, but I didn't notice any trend for me personally that a lot of my winners had Fibonacci confluence. A lot of my losers didn't have Fibonacci confluence. Structure was a lot more common in that analysis than fibs. Same thing with ABCD pattern. ABCD patterns were good. There were a lot of winners that were at ABCD patterns, But the lack of an ABCD pattern didn't really didn't really cause the trade to be bad. So I went through and just crunched all the numbers on all the things there. And what I did was I gave myself requirements. So again, I had RSI overbought, divergence, double top, double bottom. Then I went ahead and added structure. I went ahead and added structure to it. So you can do something like that, and you can do the same thing with a score as well. You can keep track of every trade. You can keep track of everything that's present at every single trade, and then get an average of score, saying, well, my average losing trade had a score of 4. On average, my winning trades had a score of 6. Therefore, I put on a rule is, if I don't trade CTS under 4, if you don't want to be as specific as needing, individual things. I was real specific at what I needed, so I didn't really have to add up a score because I knew that I needed 4 things there. But if you're just going to use a score in general, and you don't really care about RSI divergence overbought, you could do it that way as well. Just keep track of the total score at each potential trade, and then go back and look at what your average loser was. Where did it lay in that point range or that score range? Your average winner, where did that lay in that score range as well? And see if there's any trends in there. So it's a little bit harder, but my advice is define what you need. And everyone has, everyone's going to need different things. Some people won't care about anything. Nothing weighs more than the other. Some people, an ABCD pattern may be really big. Some people, Fibonacci retracement or extension may be really big. They need that. But think about those requirements first, and then work your score, work your back testing around that. Denny says, you mentioned lately that you don't use CTS anymore. What do you use? Just price action structure analysis. It's essentially the CTS, Denny, what I just mentioned. I just don't go through the score. I just know what I need to enter a trade. So I don't actually go through the CTS score and adding up and saying, hey, 1 point here, 2 point there, 3 point there. My analysis, the way I do my analysis is essentially, using the CTS score. I always start from the higher time frames. I always draw fibs on. I always look left for structure. I always look at the RSI. So my analysis is basically going through that score system. And really, the CTS score it's a trading strategy, but more so it's just a tool to help you guys be consistent. That's all it really is. It's to make sure you analyze the market the same way, and you can add and subtract what you want. But that's the key to it. The score doesn't, I don't want to say the score really doesn't matter because you want to know where the better opportunity is at. But the key to the CTS system is just consistency in your analysis. When I go through my analysis, like I mentioned, what do? I start in the higher time frames. I look left for structure. I'll draw harmonic moves in every time, right? You guys see it every day in the live room. I'll draw an ABCD pattern in. I'll draw some fibs in. I'll try to identify an area where all those line up. What do I say? I'll look for the RSI. If I'm trading double bottom, what do I need? I need the RSI overbought or oversold. I need divergence. So every time I look at a chart, I essentially go through the CTS checklist of analysis, and that's what keeps me consistent in my analysis. I'm not doing one thing one day and something else the other day. I'm doing it the exact same way every time. Consistency is the key. Other questions? All right. Okay. Well, if no one's typing in, we're going to call it a day. I'm going to see you guys tomorrow in the live room. We've got a busy trading week ahead of us. End of the month / beginning of a new month, always a busy time. You guys have a great day. Again, Monday's my lone wolf day, so don't expect anything coming to the trade floor. This is when I kind of get away from the charts. If I have something to back test or something I want to work on, I do it now. What did I just break here? Something just broke. Looks like the trade floor did something. Anyway, until next time, guys, plan your trade your plan. Good luck with whatever testing or studying you're going to do today. And I'll see you tomorrow for some live trading. Take care.